good evening, good evening, and happy Wednesday. Happy Wednesday, everyone. I hope you are having a productive week. Thus far, we're halfway there to the weekend. Come on in. I'm going to give it a few seconds here for a few people to come in the room and join us. We're going to continue to talk tonight about the requirements in qualifying or applying for a small business loan for my small business owners and the qualifications of what the banks are looking for. So come on in and join me and let's chat. We are in the middle of the month also. So we're halfway there of our 30 days live. I am so excited. Yes, it has been a commitment. It has been a commitment in the middle of doing some other things and taking care of some other business. But for those joining me, my name is Tawana and I'm with Bryant Business Solutions. I am the owner and operator and an accountant. And I am not a CPA. So there's differences. I've done lives before. I'm going to do it again as to the different designations and what they mean, so that you all have clarity and understanding so you can know exactly who it is that you need to help you in your business or to be on part of your team in your business to help you move forward as you grow. So come on in. And feel free to drop in the chat where you're checking in from. Also, like and share this out. Share this out. I'm sure someone else could use this information. Don't be selfish. Don't be stingy. Share this information. All right. So we started out on Monday. And if you hadn't heard that live, just go back and check it out. We just went over really quick some business loan requirements and how to qualify for funding for small business loans and some things that you will need. We're going to pick up. Yesterday I did do one amongst some other things. So just go check out Monday's live and then Tuesday's live also, or go back and do the whole series. Why not? All right. So we talked about the time and how long they look for you to be in business, your personal credit score, your business credit score, annual business revenue and profit that they're looking for, your bank statements, and then your personal and business tax returns. And I touched on this a little bit last night, but I'm going to talk a little bit more about this. So just like your personal and your business credit scores, the lenders actually want to use your tax returns to evaluate the health of your personal and your business finances. So you may say, well, what if I get a business loan in my business name? Will they want to see that? Well, yeah, depending on how long you've been in business. And typically what they want you to do is provide 2 years of your tax returns, okay? And those tax returns, especially if you have a pass-through entity like a sole proprietorship, a partnership, or an S corp, that's where your profit and losses are reported to your business. So they're wanting to see both of those things, both of those items, so that you can so that they can really assess the health of your business, okay? And they're going to verify 3 things: your revenue, your profit, and your expenses. And your revenue is that gross amount, okay? And your revenue, understand, is different than your profit. So you want the revenue is typically on that first line. How much did you bring in total? And remember, I talked last night or either Monday a little bit about you don't want to, and this is why you don't want to go in writing every last thing and take all the deductions and find some extra deductions from a neighbor. You don't want to do that because they're going to look at that gross revenue and then how much in expenses that you have, which will bring you to your net profit or your net loss. So that's the difference with that. They want to know what the loan's purpose is. What do you need this loan for? You want to be able to describe what you need this business funding for. Why do you need this? Okay. And you want to be very, very specific when you do that. And when you write that information in, and because they want to make sure that what you're asking for matches a number that makes sense for the purpose of your loan. Okay. Of course, they don't necessarily, they want you to borrow money, but they don't want you to borrow so much in excess of what your actual need is. They want to know the loan amount, of course, and that's what I just spoke to just now. Um, and that's just directly related again to the purpose of the loan. Why do you need it? And so when you indicate that amount, it should make sense to them. So this one here, this item, I don't see anymore. I really don't see it. Starting out in business, we tend to listen to everybody and say, oh, all you need to get started in business is X, Y, and Z. Not really realizing that there's some things on the front end of a business when you're starting that business that truly is needed, that hasn't been discussed lately. And what this does is it makes your business attractive. That thing is a business plan. Business plans on the front end can be quite costly. Of course, by all means, you can do your own business plan. If you're going to do the research, the legwork, and put that information in there succinctly. Not only does a business plan qualify you for business loans, it also helps you to be qualified for grants, free money. And I mean real free money, free money, So that's one of the things that you really, if you haven't done in your business, you really want to take a step back and assess that. So within your business plan, you'll lay out like your complete financial goals of your business, the operations and the financial goals. What are your future sales going to look like? What are you predicting? What are you predicting for your profit, your income, your cash flow? At what point do you want to grow? What do you want your team to look like? All of these forecasts and financials, it's qualitative business goals, that the amounts, the money amounts, the numbers is what they look for. And yes, we do business plans here, but you'll want to use those documents to show that any lender that you may, be pursuing, that you thought about the potential opportunities and challenges that may arise in your business. And because all they really want to know is how you going to pay this loan back. That's really all they want to know. But the investors, now that they're vested in your business, they want to know, how are we going to make some money off the dividends from this? So, and I say investors, as we think about investors, it also brings me to a point of you thinking truly about the entity setup and how your business is structured. I'm going to talk about that a little bit more later, but you want to think about that, because one entity structure is very attractive for investors. Well, two of them are actually. One where you can have up to 100 investors, and then the other 100 and above. The other thing that we're going to discuss tonight, because I don't want to get too overwhelming or anything with that, is your industry. Some industries, believe it or not, are high risk industries that lenders don't want to and will not lend money to. And so you want to research your industry and what level of risk it is. And how do you know that? It's something called the NAICS code, the North American Industry Classification System. And that classifies, or your SIC code, which is the Standard Industrial Classification. And those codes actually will tell the IRS as well as lenders the potential risk factor involved in that industry. And a lot of times when they see, for example, childcare businesses, credit repair businesses, healthcare, law offices, apparel companies, those are some lenders some industries that may be barred because of the impact of the financial health of that industry. There are typically firearms industry and adult entertainment. It's a no-go. It's a no-go if your business is structured and that's what you have as your code. Make a lot of money in your business, because the chances of you getting a loan are very slim to none. Those are ones that have a big red X on it. You don't want to misclassify your business either, because the misclassification of your business can cause your loan application to get rejected simply because of that code that you have on there. But it helps the IRS in the manner of, oh, you said for a barber or a stylist that this particular item, they needed weaves or wigs for their business to do the business. Well, that's something that's standard in that industry. So the fact that you have a lot of those, or someone who's a travel agent, let's say, and they have a lot of travel on their taxes, it doesn't raise as much of a red flag because those are industry standards for those particular, industries. So it really assesses multiple things in multiple areas. So be very mindful when you're electing or selecting that NAICS code for your business. All right. So we're going to wrap up with those 5 for tonight. And I got 5 because we have 20 total that I want to run over really quick. So I'm just breaking them down into more bite-sized pieces so that these lives aren't super long. But join me tomorrow and we'll talk about the next 5. If you're catching this on the replay, #replay down below and share this live. All right, guys, I thank you and have a great evening.